Hello and welcome to episode 20. Today we are going to discuss Microsoft, which trades on the NASDAQ Stock Exchange under MSFT. Before we get started, I'd like to remind you to check out our website at stockmarketideaspodcast.com. And also, if you're interested, there are a couple of different ways there where you can support the show. And we thank you very much for that. All right, let's get started.
Welcome to the Stock Market Ideas Podcast, where we discuss value investing and long-term investment ideas. Make sure to subscribe, and you'll get all of our most up-to-date episodes with investment ideas you should be thinking about. Here's your host, Ted Vilas.
Hello, and welcome back to the Stock Market Ideas Podcast. Thank you for taking the time to join me today. I am excited to get into a little bit of a discussion around Microsoft. And for quite a few years, there have been multiple reasons to like Microsoft as a long-term investment. But as with many technology companies in the past 10 or more years, I just never seemed to be attracted to Microsoft based on the valuation more than anything else. And of course, we'll talk about valuation in just a few minutes. And valuation can be quite relative, of course, depending on many factors within the business, including growth. But as of right now, Microsoft is over 27% below its highest point around a year ago. It currently sits over $255 a share, which is actually just a little bit up from its most recent lows last month, which were around $214 a share. But Microsoft has been making headlines recently because of its massive acquisition, or at least attempted acquisition, of Activision Blizzard. If you haven't heard about that ongoing story, Microsoft has been trying to buy Activision Blizzard for $75 billion, which would immediately make Microsoft even more of a global video game powerhouse. Just recently, the FTC actually filed a lawsuit trying to block this acquisition, stating that this proposed acquisition may lessen competition substantially or tend to create a monopoly. Something that, of course, Microsoft has already been arguing against in order to try to avoid this, and something that it will likely have to argue in front of a federal judge. So as of right now, there isn't too much more to say about this. But of course, if someone does decide to become an investor in Microsoft, it will be pretty important to look into this a little bit more deeply and form an opinion as to whether or not you are comfortable being a shareholder, whether or not this deal goes through. Historically speaking, shareholders don't love massive acquisitions such as this one. And if the acquisition is blocked, it probably won't have much of an effect on Microsoft's long-term outlook, other than the fact that it will have to pay a $3 billion fee to Activision Blizzard. So let's look at a couple of other important metrics that tell us just how high quality of a business Microsoft is today before we look finally at valuation in just a moment. Overall, Microsoft seems to be a very financially stable business with a total cash position of around $104 billion and a debt position of just over $61 billion. It has a very healthy interest coverage, where operating income is far higher than the interest expense for the past year, a debt to revenue ratio of 0.3, which is fine, and a few other positive financial strength metrics, including the return on invested capital being higher than the weighted average cost of capital. And this is where we'll get into a little bit on the profitability of Microsoft. And by the way, if you're interested to take a look at the tool that I use to do my research, which is called Guru Focus, please take a look again at stockmarketideaspodcast.com. I do have an affiliate link there if you're interested to take a look. Now, Microsoft is a very profitable company, as you can probably imagine. It has a gross profit margin of around 68%, operating margins above 41%, net margins around 34%, and a return on equity of above 42%. All of these are fairly indicative of a company that has the ability to keep its prices at a higher level. And if you think about some of Microsoft's largest sources of revenue, such as the Microsoft 365 or Office 365 software, or the Azure cloud computing platform, then you quickly realize that Microsoft has really developed a long-term competitive advantage where the vast majority of customers really don't want to switch away, even if they do find something that they like a little bit better. The switching costs are just too high for most people, and leaving the ecosystem that they're used to is more often than not just not worth the hassle. So that tells you just a little bit about why Microsoft can be profitable. And you can probably put other software companies into the same category that have developed ecosystems where their customers really like using that software. Now, when it comes to valuation, as I mentioned earlier, Microsoft has come down quite a bit from the previous highs that it enjoyed around November of 2021, a year ago. But with a current price to earnings ratio of about 27.5, it's really difficult to call it blatantly cheap at this point. Of course, I wouldn't expect a company as profitable and dominant within the marketplaces that it operates to actually become cheap unless something very bad happened. Now, given all of this, in addition to Microsoft's growth rate averaging above 16% over the past 10 years, and the potential for what it can do in the gaming industry if the previously mentioned acquisition goes through, as well as other developments that can take place over the next number of years, it really is difficult to say where Microsoft will be in the future. Although it's hard to deny that it will probably continue to be a very healthy company and one that continues to grow. If this is the case, then a price to earnings ratio over 27 in today's market may actually be a decent price for a very good company if you plan to hold it for the long term and if you're optimistic on all of the things that Microsoft is working on. Don't forget also that Microsoft does pay a dividend with a dividend yield of just over 1% and a healthy dividend payout ratio of around 0.25. Something to factor in if you're comparing it against another potential investment. Okay, well, I hope you did find this very useful. If you found it interesting or helpful, please leave a positive review if you can. Thank you so much and bye for now.
To make sure you get our most up-to-date stock market ideas, be sure to subscribe, rate, and review this podcast. Thank you for listening to another episode of Stock Market Ideas.